If you are setting up a business in the UK, or indeed are thinking of doing business with the UK, then there are some key VAT considerations you should think about if you're to remain compliant and avoid penalties. To give you an overview as to how the system works in the UK, well, there are three taxable rates of VAT. So we have the standard rate, which is 20% VAT, the reduced rate at 5%, and the zero rate at 0%. The zero rate covers things like sales of books, children's clothes, food, and even exports of goods from the UK. We also have exemptions. Now, exemptions apply to things like insurance, financial services, care and welfare, and education as examples. Exemption is different from zero rating in that whilst no VAT is charged, VAT that you incur on related expenditure usually is not recoverable to the extent it relates to the exempt activities. In terms of registration thresholds for VAT, well, it's nil if you're a non-UK established entity, £90,000 if you are UK established, and £90,000 is of taxable income that is incurred within any 12-month period or just in 1 month alone, in which case you would have to register for VAT before you sold £90,000 worth of taxable goods or services. VAT returns are filed quarterly, but it can be monthly, and you would choose to do that if you're in a regular repayment position with HMRC. So for example, if you're incurring lots of VAT in the UK, but then exporting the goods, which would be zero rated from the UK, then you'll probably want to choose monthly filings. Turning now to what the common reasons would be for a UK VAT registration. So if I were you, I'd be looking at the goods that you might import into the UK, looking at contracts where you're supplying goods, but also perhaps installing or assembling those goods, sales of land and property. They could be exempt, but or it could even be zero rated, but they can be standard rated too, in which case, for the zero rating and standard rated sales, you would have an obligation to register for VAT. Services that are specific to particular pieces of land or property, that could require registration, albeit business to business supplies. If your customer is UK based and VAT registered, then they can they self-account for the VAT under what's called the reverse charge mechanism. And finally, a growing area, of course, B2B2C, business to consumer digital services. Turning now to VAT compliance. Well, the good news is that if you were to VAT register, there would be no need to appoint a fiscal representative for VAT. All you need to do, you could do it yourself, but you could appoint simply a VAT agent such as ourselves to manage your VAT return filings. Bad news on penalties in terms of thinking about when do I register. Well, if you are late in registering, then HMRC can go back up to 20 years. And they would base their penalty, on the amount of tax that's due over that period of time, but also on how late you were in disclosing that requirement to HMRC, and also how you disclose it to them, how cooperative you are. In terms of errors on VAT returns, though, HMRC can only go back 4 years. So there's quite a difference there. The important point there, I think, is make sure that you find out when you are supposed to be registered and make the application as soon as you can. Looking in a little bit more detail now at the specific areas of concern that I would be looking out for. The first one is goods that are imported. So if your goods are, in terms of the consignment value of your goods, is under £135, then the goods won't be subject to the customs clearance for goods over that amount, but the seller still needs to register for VAT. So that's for mail order, direct mail order goods typically. And that applies to both business to consumer and business to business sales, unless the business customer gives you a VAT number. If you're selling via an online marketplace, then the online marketplace would be the one that charges the VAT to the customer. For goods with a consignment value over £135, then you need to start looking at the Incoterms, the shipping terms, and what they say. If you ship on a DAP, a delivered at place basis, the customer in the UK would be required to pay the import taxes. But if you, the supplier, are shipping on a DDP basis, which means delivered duty paid, then you'll be the importer of record and responsible for paying import VAT. It will also mean that you will have a need to charge VAT to your customer once the goods have been imported. So things to look out for if you are a DDP supplier is, first of all, how do you get goods through customs? So customs clearance. If you are responsible for the declaration, you must be established in the UK. So that means either a need to appoint what's called an indirect agent, so that means an agent that will act in its own name and in doing so be jointly liable for the VAT and duty that's paid, or you'll need to set up a UK establishment, and then of course there are direct tax issues in doing so. But once again, there would be a need to register for VAT, and you could pay the VAT either at the port and have a certificate which would entitle you to then recover the VAT, assuming you're making taxable sales in the UK, or you could pay the VAT using postponed VAT accounting, or PVA, and you pay that on your VAT return and recover the VAT that you paid, your import VAT you paid at the same time. But remember, VAT will then be charged on your supply to the UK customer, again assuming the goods are standard rated. Moving on now to supply and install, I reiterate, you need to look at your contracts to determine whether you are responsible for any element of installation or assembly. Now, even if you subcontract the installation to a local contractor, you will still be required, if your contract says you are required to install, to register for UK VAT. There is a one-off simplification, and that is one-off supply, where the customer then acts as the importer and pays the import VAT and duty. However, the disadvantage with that is that the customer then has to pay the import VAT and duty based on the total contract sum, not just the value of the goods. The other issue with supply and install can be about the use of your Incoterms and whether the customer is responsible for paying the import VAT and able to claim back the import VAT. HMRC says that only the owner of the goods is entitled to VAT recovery at import. So if you imagine a supply and install contract that lasts 3 or 4 months and title only passes once the goods have been satisfactorily installed, then there's obviously a long period between import and when the customer takes title to the goods. Will HMRC allow the customer to recover the VAT at import? And finally, digital services. So digital services that are supplied on a business to consumer basis include broadcasting, telecommunication and e-services, which have minimal or no human interaction or intervention. And of course, as I said, there's a nil registration threshold. So as soon as you make a digital supply to a private consumer in the UK, and it's one of the following: supplies of images, of text, music files, games of chance, online demand programs, online magazines, web supply, web hosting services, distance maintenance of programs and equipment, software supplies and updates, and advertising. One of those things, for example, would give you a registration obligation in the UK. So I hope that's been helpful, and if you have any questions or you'd like to explore that further, please do get in touch. Thank you.